What's up everyone, welcome back to another video with the Millennial Finance. From the second quarter of 2020, we witnessed one of the strongest bull markets in recent history. The Nasdaq 100 or QQQ went up by 146% in a span of under 2 years, and this is way higher than the 8 to 10% average returns that we expect from the market every single year. Since I only started properly investing my money during this time, I actually started to get a bit cocky. I thought that I was the smartest and best investor in the world and that those old folks like Warren Buffett had nothing on me. As usual, the markets always find a way to humble people, and I gave back a lot of my profits during this time. Similarly, I made a big bag from crypto and NFTs in the recent bull market as well, only to give back a sizable portion in the recent declines. So, what can we learn from the last bull market so that we don't repeat the same mistakes in the next one? Let's find out. Cha-ching! So the first, most obvious mistake in my opinion is that I didn't take profits. This is especially for those who are investing in individual stocks or crypto. It may not apply so much to those who just, DCA into long-term indexes like the S&P 500. I mean, even though you could have saved some money or, saved some of your profits if you did sell at the top and, start to rebuy back now, but that really isn't a strategy for DCA. Now, the problem happened for me when the stocks that I owned during the big run-up started getting some insane valuations. So if you're talking about the average stock, usually they would trade with a price to earnings ratio of around 20 to 25. At the peak of the bull cycle, growth stocks like Fastly traded at a price to sales ratio of over 47, and this is based on their revenue, and we're not even talking about profits yet. So valuations really started getting crazy, and in hindsight it was just way too obvious that these stocks would give back some of their gains just to retrace to what was a normal level. Today, Fastly trades at less than 10% of the multiple with a price to sales ratio of only 4. So it's not that the company was, bad. The revenue growth recently has started to slow down, but more than anything else, it was purely a multiple compression. So even if the company continued doing well year after year, we could only expect minimal returns on a perfect scenario. So the same thing happened for crypto as well. It went on its own bull market that was even crazier, that was driven by massive liquidity, more retail participation, and more speculation. That kind of increase, when you go more than 10,000% in just a year, usually, like I always say, it's not sustainable and we should always expect a retracement. So the lesson from all of this is, if I was a bit more disciplined in taking profits and stopped thinking about what if all of this just kept going higher, that would have kept a lot of my profits I made during this time. So don't be greedy, especially if you're investing in things like individual stocks, crypto, or any other individual assets. Like I said, if you're investing in long-term indexes like the S&P 500 or the World Index, then maybe this wouldn't apply to you. But a general rule of thumb is, if you've made so much profits that you want to post it on social media or share it to all of your friends and family, then it's probably time to sell and take your profits. The second lesson I learned during this bull market is on a related note, which is don't FOMO, there will always be another opportunity to buy. So there were moments in this bull market that some individual stocks and crypto as well were just absolutely flying, going thousands of percent up in a very short amount of time. So this on its own can cause FOMO, but it's only amplified by the fact that social media, you can see all of these other people who, maybe by luck just invested into this stock or coin and, start posting it everywhere. You can see it left, right, and center about how this company is going to be the next Apple. It's an amazing company and, you'll never get a second chance if you don't buy now. So when you're seeing so many people make amazing gains on a stock that is backed by an actual good company, then you may feel like this is my only and last opportunity. Those things really start to get to your mind. What if it never retraces, or what if everyone is actually right and this will be the last opportunity that I have to buy at these prices? Well, like I said, in most cases, if you see a parabolic run up, meaning a stock or crypto going so high in a short amount of time, then we should expect a retrace just purely down to mean reversion. So there's no need to rush into a stock that went up by 200% in 1 month. You'll always get another chance. And if you really liked the company fundamentally and not just because the stock price is going up, well, this would be a test for you, because in the future when the stock price does go down, you'll surely like it more since it's cheaper. On the rare occasions that these are really 1 in a million companies that never retrace and this was actually the last opportunity to buy at these prices, then all we have to say is, oh well, move on with life, because there's always another fish in the ocean. There's a really good saying that I've seen on Twitter before, which is, I'd rather be out of the stock and see it moon than be in the stock and see it dump. If you think prices are way too high and it doesn't justify the fundamentals of a company, then just wait it out, even though it may take months or years, because most of the times the retracement always comes. There are of course scenarios where you bypass this rule, but as a beginner investor, you should always just stick to it like a general rule of thumb. It happened to me many times, even buying the indexes. I was trying to think when to buy the S&P 500. I was reading all around that inflation was coming, prices were too high, but I did think to myself, what if this time is different? What if this time it doesn't retrace, it just keeps going up? But slowly you learn that this time it's really not that different. The third thing that I learned from the bull market is that you should not live your life off of your unrealized profits. So this didn't actually happen to me, but I have seen this happen to many people that I know who are struggling now because of it, which is why I thought I'd point it out. So basically, these guys saw their portfolios moon and started living life as if the money that they see on their brokerage account is actually cash that they had in their bank account. So the thing about unrealized profits is that just like unrealized losses, it's never really yours until you decide to click sell. So these people started eating out at fancy restaurants, bought nice cars, and even bought crazy expensive houses. They could sustain it because, the bull market was crazy. They knew they could make money easily and they could sell off a small portion of their portfolios just to sustain this lifestyle. Well, everything changed when markets in general decided to take a turn. Their portfolio size from, millions dropped to under $1 million, and they started to realize that, what's the point of this fancy car? I would much rather have $200,000 because I need it for my day-to-day expenses. So the lesson from all of this is, no matter how big of a gain that you've made, never live your life like this is your actual money unless you decide to hit sell and withdraw it all to your bank account. If you fail to do this properly, lots of people can give back, nearly everything that they made from scratch, and it would be a shame to do so. So the final thing that I learned from this last bull market that I will definitely try to apply in the next one is that you should always stop living in the past and just look forward. So there's a quote that's being used a lot by business leaders. Maybe some of you have heard it. Funnily enough, it's actually said by an ice hockey player. Basically, he says, I'm skating where the puck is going to go, not where it has been. Basically, we need to be as unloyal as possible when it comes to investing. Who cares if you made a lot of money to a stock or a crypto? If its time is over, then it's over. Many people also say, never get married to your investments. At the end of the day, they're only there to make you money. This was dominated by many high growth stocks that dominated the 2020 period with huge gains. These are basically, the genetics, the SaaS companies and all of them, who basically from Q1 of 2021 onwards actually already started the bear market of their own. While going into a bear market after such a huge rally is normal, the thing is the index continued marching on higher. The reason that this happens is that the market continuously finds new leaders to lead the next bull market, and it won't always be the same stocks. So many of the large investors of these high growth tech companies started to realize that the majority of the revenue growth already happened, and coupled with the insane valuations, it just didn't make sense to hold the stock any longer. However, me being loyal to these stocks, just because I was a new investor, these stocks made me crazy profits, so I kind of, stuck to them even though their prices were going down while everything else was going up. Some people are even saying that the FANG stocks, the leaders of the last decade even, Facebook, Apple, Amazon, Netflix and Google, that their time is soon up and they'll be replaced by new leaders. Even though at this point it seems unlikely, I would not rule it out. On a macro level, everyone was having so much fun with the massive injection of liquidity into the economy. Every asset class was going up, but we all forgot that it all eventually had to come to an end due to inflation. I mean, this inflation narrative isn't completely new. It started to surface in early 2021, but I simply shrugged it off because I thought it was still far off. If you guys want to laugh at me, then the first video that I made about a huge inflation coming was 10 months ago, and yet here I am completely unprepared for it. So the lesson from this is that we should stop living in the past. Don't be loyal to our investments. If they're not doing well anymore, then just move on to the new set of leaders. Like I said, at the end of the day, we're just here to make money. We don't really care about these companies beyond that. So while it definitely was painful giving back so much of my profits during this time, I still feel incredibly grateful that my portfolio is still intact at this point. Also, I prefer to take all of these as learnings rather than try to blame external factors such as, the Fed, that the economy is going bad and whatnot. This way, I'll be much better prepared going into the next bull cycle, and hopefully you guys will be too. If you want to get started in the investing journey, then in my opinion, now is as good a time as any. Check out all of your options below. There's individual stocks, there's crypto, there's robo-advisors. Just figure out which one works the best for you. And we also have some affiliate links down in the description below. Some of them you'll get some nice bonuses, and it'll of course help the channel. Thanks for watching this video to the end, guys. Give us a huge thumbs up if you liked this video and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.